Hi, this is Mary Keurig, and as you know, I'm Frontrunners Innovate magazine, and I am with Richard Byrd right now. And Richard is an investment banker, and he's with GT Securities out of Indianapolis. And I don't know if the headquarters is there or if just you are there, Richard, but anyway, this is an investor interview, and we want to find a little information out that might help some of our innovators as they're moving through the hoops toward commercialization, and maybe some of them already there, but could use a little extra, let's just say wisdom, nuggets of wisdom from you about searching for next level of funds. So I'm going to let you tell us a little bit first about what you're doing with GT and what all is involved with some of the work that you're doing, because some of what people think you do is not the breadth of all that you do. You just told me some things a while ago. So share a little bit about that first, and then we'll go into some ideas.
Right. Well, I live in Carmel, Indiana, but the company is in LA. So I cover the country. No one knows I'm in Carmel, which is okay, but we cover the country. So we are an investment bank and raise capital, M&A activity, both buy side and sell side. We're kind of unique. We've got a great transaction page. I work a lot in the medical health and logistics space. Historically, I've also worked with commercial buildings and raising capital and workouts. So that's my background to some degree. I've been in the business almost 30 years now. Started as a municipal bond underwriter in Chicago for Clayton Brown. So I'm still out working, looking for transactions daily and speaking to potential issuers or clients. Kind of a neat thing about our group is I only work with institutional investors. So I don't work with individuals. So we probably start about 10 million to the goal is 20, 25 million for a client. And that will take anywhere from a minimum of 3 months to 6 months to a year to raise that capital with the proper group. I emphasize to every issuer or client, they need to profile or have in context a CFO of some structure, or be open to a CFO recommended by the investor group, the family office, or the PE group coming in. They need to have a board built or profile board and be very open to having their investor group place 1 or 2 individuals on that board. The board is extremely important because the goal is to take that investor's monies or their capital and to double or triple it in a 2, 3, 4-year period. It's always better to ask for more money than to ask for less. They're working with people who want to grow their capital. So when I get these discussions or requests for 300,000 or $1 million, I always say it's hard to build a house for 300,000, maybe even not $1 million. You can't build a company for that. So you're going to have to work in phases on how to bring 10 to 25 up to 40 million in to really grow the company. And when one thinks about the cost of commercials to advertising to employees, it's easy to go through 2 or 3 million almost immediately. And the proper investor group or family office, they don't want the C-staff or the owner of that company out running for capital. They want that company to be grown and the EBITDA or the valuation of the company to grow also. So the goal is to get enough capital availability to where that company can grow. And many times we work from the exit strategy on how to grow the company. So that's what GT and I are about. GT actually means grow think. So we work with a lot of young companies to get them to a larger size.
Cool. I don't know if you can, but I'd love it if you could give a success story, even if you couldn't give the names. When we first met, you talked about a real unusual situation you did, project that you worked on in Florida, that kind of showed a little bit more of the depth of what you can do. But
yeah, that was a very unusual project.
Okay, if you'd like to share about that or any other.
Gosh, that's an old project, but that was pretty cool. this goes back over many years ago when there was an empty hospital called Victoria Hospital in Miami, Florida. And that was brought to me at a different company many years ago. And here's an empty building for 8 years. And 8-story building that's empty is not good, as we all know. So I wound up, I believe that became now the Victoria Health Center for what we know today. It was one of KeyBank's or their health group's first loans many years ago. And that we took for was an $8 million equity deal and made a $6 million transaction on a debt side because we put Kindred Hospital on the top. We condoed each floor as a separate business, and then those became assisted living apartments per floor. The bottom 2 floors became ancillary services, other physicians, rehab groups. But that's the creativity that people in our group have, is looking at a transaction and what can make it work. So instead of just trying to hammer it out with it's equity, it's no, what can make the transaction occur and get the transaction closed. So that was one of the neater transactions probably in my lifetime. I'm very proud of that transaction.
Yeah, I would be too.
But it took a team. You know, I didn't do it by myself. It was my internal team and their team and KeyBank Health's team. So at any transaction like that, one person doesn't orchestrate it and close it. It takes a team.
You know, we've been on 2 or 3 phone calls at this point, but so I kind of know how you might answer this. But when somebody's coming to you who is, say, an innovator, a startup in the health space, and they have something that's just best thing since sliced bread, what do you want from them initially to turn the light bulb on for you, and determine whether or not that you think you might be able to work with them and help them with funds?
You mean as far as in economically, or do you mean as far as in what they're going to bring to me?
What do you need to see to determine whether
Documentation.
or not they could be a prospect for you to
Oh,
help raise funds? Yeah.
well, to be really direct, probably attitude, you know,
What's that?
and the ability to be coached. Because if I say to them, you know, an investor group's going to come in or a family office, and they may want to appoint a new CEO, and you're the acting CEO founder, how's that going to affect you? If they say, oh, I won't do it or never have that, well, that's not good. If they say, oh, I admit that, you know, I've never run a $10 million, $20 million company, I'm willing to be trained and be the project manager, that's a good attitude. Because, you know, a lot of these companies that don't have that attitude, they become nothing. Where if they have the attitude that I'm going to give up a good piece of my company, I'd rather be second, third man or woman in charge and come out pretty well in this and absolutely have nothing at the end. So attitude going in and trainable. When I asked them, where's your board? They said, me. I said, well, we're going to have to build a board of 5 to 10 people. So let's profile that. And then I asked them about their source and uses, how they foresee money come in and what they can do with it. And a few of the items I always ask them is, please tell me or have it in written documentation, at least in thought process, how many millions or how much capital is it going to take to get your first order, to get you to profitability, to get you to $1 million EBITDA. So when an investor asks you those questions, you don't say, I don't know. Say, well, I have the projection here. It's going to take 5 million to get to cash flow positive, or 10 million to get to cash flow positive. Don't come back and say, I haven't given that a thought. So a lot of this is coaching on how to address or respond to an investor group or an individual asking questions, and if they're willing to be educated and then learn from that. So to me, that ability to be trained or to be coached is very important.
You know, one thing I learned from you on a recent call is, and correct me if I'm wrong, is, you know, the valuation process where a company gets valuated and get the value attached to it. And you said that comes from an investor that likes you, right? I mean, if they're
Well, yes and no. I see many young companies with no orders that have these unbelievable valuations of 10 million, 50 million, 100 million, and that's not going to work. If there isn't a cash flow yet, uh, their valuation is very low, probably 3.5. They have to be realistic how their valuation is being calculated. And a lot of individuals think that they need to boost that up. Well, if they raise on their own 5 million and they have a $50 million valuation, and then we come in or I come in to raise 10 million, and we knock the valuation down by professional investment group to 3 or 4 million, they squash the value of their original investors. So a lot of this is managing expectations. Because I deal with only institutional investors, they don't need a PPM or an evaluation because that group will do their own. They'll come out with term sheets, their own pricing. The client, which is the issuer, doesn't have to take that, but they'll perform their own valuation and or their own thought process on where this company is. So if they over exaggerate, not meaning to be negative, but if they overdo what they think the valuation is and they're trying to sell that, that's a negative. Most investor pools or groups of family offices or PE firms, they want this individual to be thinking very realistically. Yes, my valuation theoretically is 3 to 5. It's not 50. It's not 100. You don't have cash flow to prove it. And yes, your patents have value. Uh, your product could have value, but until you have letters of intent or cash flow, there's nothing to prove that. Then where they say, I have the only company that does this, well, we can go on the internet and pretty quickly find other competing companies in the market doing the same item. But they don't, I tell them, you don't want to say you're the only company doing this. You want to say, I'm one of 3 or 4 that we know about. It's just we're all on different paths or at different levels going into this.
Fantastic. That's great information all the way around. I knew it would be. And I almost feel like I'm going to have to come back to you and have another conversation to get some more little gold nuggets there out of you. This is it for us today, but maybe another time, Rich, we can have another chat and get some more information. I appreciate it so much. And I know
Well,
the
Mary,
innovators.
thank you for having me. I greatly
Yeah,
appreciate it.
it's great information. I'm sure the innovators are going to be tickled to have this. You know, so we're gonna have you up and rolling on the magazine probably in the next 24 hours. So awesome. Thank you. We'll be
Thank
talking
you.
again soon. I know we will.
Thank you, Mary. Appreciate it.
All right.
Bye.
Bye-bye.